We're getting close now to the end of the year, so have you been doing this well? Have you been doing all you can to plan financially? And CLA tax principal and CPA Charlie Heid is here to go over some things to keep in mind. Charlie, great to see you again. The big, beautiful bill that was passed several months ago now did a number of things. One was no tax on tips. There are stipulations,
right.
Reduction in senior citizens' taxes with Social Security, which was good. Also, permanent tax cuts, which was something that Trump had pushed through. Where are we with those and their impact on our taxes for next year, next spring?
Well, it's a huge impact. So when you think about what I like to think of is marginal tax rates. There's 7 marginal rates that came into play with the Tax Cuts and Jobs Act, which was the bill Trump had in his first term. But that was set to sunset. And this one big, beautiful bill now made them permanent, which is fantastic because you can now incorporate these rates into long-term tax planning, which we haven't been able to do because everything was always, you pass it and it's going to sunset, 10 years later. Now we know it's permanent. So that's fantastic.
Standard deduction, has that been increased, decreased, same? And most people watching probably do the standard because it's just so generous now anyway.
Yep. I mean, 90% of taxpayers in the U.S. take the standard deduction. Standard deduction has increased for 25, and it is now, and it will be $30,000 for married filing joint and $15,000 for single. And the beauty of that is it's set now to index for inflation. So it will continue to rise to try and keep up with inflation.
So that $30,000 for a married couple, that's just right off the top of your income, just knocks it down from that down to that, and you'd be taxed on that.
Yeah, so your income makes up what's called adjusted gross income. Then you get your standard deduction, which then takes you to taxable income. And that's when you would apply taxable income to the marginal tax rates.
Charitable gifts, how has that changed?
Charitable gifts for this year has changed a lot. So if you have people that are itemizing out there, charitable gifts are important because there's some new limitations that come into play in 26. So there's incentive to accelerate your charitable contributions into 2025 to avoid those new limitations.
Explain that.
Yeah, so there's a haircut. So in 2026, if I give, 20,000, or let's just say, we'll make it simple, 10,000, I get to deduct everything that's above 0.5% of my AGI. So if my AGI's
AGI?
Adjusted gross income.
Okay.
So you get a haircut, which never existed before, meaning that I donated 10. There was always a ceiling that you were limited to 60% of your adjusted gross income.
Okay.
Now they're saying you can only deduct if you exceed that haircut, if you're over the threshold. So, and it all depends on what your adjusted gross income is. But doesn't exist in 25. So pulling contributions in, accelerating them, bunching them into 25, you'll avoid that new limitation.
He really knows his stuff. That's why he gets the big bucks, right, Charlie? Deduction available. What's new with that?
Well, the deduction available is starting in 26. For those of us that take the standard deduction, we now will also be able to take a charitable deduction in 26 on top of my standard deduction, which is great.
Oh yeah, overtime is now a deduction, yeah.
Overtime is you get a $25,000 deduction for married filing joint, $12,500 if you file single, and then that goes along with the tips. You get a $25,000 deduction for tip income. What's going to be interesting is in 25, no changes to W-2s. So your employer is not going to have anything on that W-2 that tells you what your tip income was, what your overtime income was, but employers need to give you information so you can claim that on your 25 return.
I saw deduction on interest for new car loans.
Yep.
Now, didn't have to be in the United States or a domestic
It does. The car must be assembled in the U.S.
Okay, so most Toyotas, most Hondas right now, are they assembled in the U.S.?
Well, and the beauty is the VIN number that's going to be in every vehicle you buy. You can go out to the IRS website, put that VIN number in, and it will tell you if it was assembled in the U.S.
That's brilliant.
Yep.
How much have things changed since last year? Quite a bit with the Big Beautiful Bill? Because my question is this, as a professional, another professional do the same thing that you do, and we all need you very desperately. How much education do you have to get year to year?
So for a CPA, you have to have 40 hours of continuing education every year. You report every 3 years, and therefore you have 120 hours of continuing education every 3 years.
And they'll summarize the highlights of what the thing is and get you schooled on that. I mean, you're pretty much up to speed anyway with it since you follow it. But
Right,
still.
right. Now, the one item related to planning for this year, and especially around here, we have a lot of people that just, when the Tax Cuts and Jobs Act passed, they started to just take the standard deduction.
Yeah.
But when you think about before that, you might have been itemizing because you own a home, you have mortgage interest, you had
charitable stuff, yeah.
charitable stuff, and you had a much larger state and local tax deduction.
Oh.
The cap of $10,000 changed with the One Big Beautiful Bill. It's now $40,000. So if you make under $500,000, you're going to get to deduct up to $40,000 of your state and local, and that includes your real estate taxes, your Ohio income tax, your Michigan income tax, your City of Toledo income tax. You add all that up, you're probably over 10, but you now can deduct
Keep it nice and
all
simple.
of it. Yeah.
Charlie, good to see you. He'll be back in December with one more update before we get the first of the year. Charlie, thank you so much.